Aloha, ladies and gentlemen. Today we are going to be discussing FCX. This stock will be the first stock that will be put into the sample portfolio. You'll be able to find a link to the sample portfolio in the description of this video. But let's take a fundamental analysis dive on FCX and see what we find. And then if things look decent, then we'll look at the option chain on it and maybe even set up a fictitious trade to simulate something. Sound fun? Let's take a look. So, FCX, Freeport McMoRan. You can see that FCX engages in the mining of minerals in these different places. It primarily explores for copper, gold, this Mali word, and silver and some other metals. From my being around the stock market, I have kind of known them to be more heavy on the copper side in the materials or basic materials section. So now that we have just a brief overview, let's take a quick look into any what is the degree of obsolescence risk that FCX might have. If it has a high degree of obsolescence risk, then maybe we should choose a different stock other than FCX. So we can start this by doing an internet search for something like this. How often is copper used in everyday life? And the first example showing, by the way, these searches were done August 4th, 2025, almost 5 p.m. Hawaiian Standard Time. Okay, electrical wiring. You see any electrical wiring going away anytime soon? Is there anything you think that might be on the horizon to replace electrical wiring? Because apparently copper is used in electrical wiring. Plumbing. Apparently copper is used in plumbing. You see anything on the horizon that's gonna take plumbing out of the picture? Plumbing will become obsolescent or obsolete. Sorry. Is there anything electrical wiring, plumbing? What about electronics? Now, I guess you could say, well, maybe they could find something better to go in electronics, like gold. But gold is a bit price prohibitive, right? So maybe copper will continue to be the most economical way to do that. Roofing and gutters. I didn't know about that one, but apparently copper is in roofing and gutters. You see any gutters or roofing going away anytime soon? Somehow is that going to change where copper's not going to be using it? Industrial machinery. Apparently, many industrial machines rely on copper components for their heat and electrical conductivity, from heat exchangers to what is that? Electric motors. Copper is essential for all efficient energy transfer and heat dissipation in the manufacturing processes. Now, you don't have to be the best reader to be a profitable stock trader. So that's, I guess, one thing that's working out for me. But just this one alone, right here, that's pretty big, right? It's used in a bunch of stuff. Renewable energy systems. Is that going away anytime soon? Is there something going to be phasing that out? Right? Even if you say, well, the carbon, I forgot what that stuff is called, non-renewable. I forget what the buzz term they're using nowadays. But if you're just going back to like oil and coal and stuff, you still have all these things like doing all these things. So I don't think this is going away. Transportation, cars, aerospace, electric vehicles, coinage, that's probably going away. Jewelry and art, that's not going away. Medical applications. So there's a lot of there is a lot of items that copper is being used in. You can search some more. Look at this, top 32 common copper uses in your daily life. So overall, you can see that I believe you can see I believe that copper is not copper itself, the commodity copper. It doesn't have a high exposure to obsolescence risk. In fact, it seems to be a very vital element that we as humans are have been using, and it seems like we'll continue to use as things get more on the whole electrified or whatever, using electricity and just more and more technology stuff. Okay, so now that we seem to have established it, copper itself has low a low obsolescence risk. Well, something else. What about a moat? So how with this one, how long does it take to bring a copper mine to full production? In the Warren Buffett way of looking at things, wouldn't be the only moat, but this could be in that type of category. So if FCX is in the business of mining copper and you want to compete with them, how quickly can you get your copper mine up and running? Now, obviously, just a really quick internet search right here, you're seeing about 17 years, about 18 years, timelines for developing copper mines. Let's see if anything pulls up on this. So we're looking at compared with 12.7 for mines that started up to 15 years ago, reaching almost 18 years for mines. So I guess we're really looking at over a decade and maybe getting close to 2 decades. Now, if you really have to have a strong resolve to continue to pour money into a business and not even know if you're going to be profitable for at least 18 years. I think there's a lot that goes into this, like getting approval permits from governments and all these different things. But it would appear that this is a business that's not too easy to get into. So it does give a little bit of a moat around companies that are already in, and it's using an item, copper, that um, is more than likely going to continue to be used for the next 200 years, and as long as humans are around, in my guess. So, is what can we find out about FCX? The first thing we might want to look at is it even profitable? And unfortunately, it seems like I can't find, or Yahoo Finance eliminated the easy free cash flow spot that I used to look in the past. So, in an indirect way of trying to figure it out, we got total expenses, net income. So it looks like they're profitable if this is net income. Another way that we can look at that is, how about free cash flow per share, 32 cents. Now I'm not excited about 32 cents per share of free cash flow. I would much rather see something higher, but at least it's some free cash flow. Sales per share, almost 16 bucks, a little bit over $1 for earnings per share. Dividends per share, 60 cents right now. Looks like it's been trending up. Book value, 1163. We went over the cash flow per share, $4.29. Anything in here that would be worth taking a quick look at? Operating profit margin, dividend payout ratio. They're paying out about almost getting close to 50% of their earnings. Shares outstanding, quite a few shares. Oh, gross margin 28%, operating margin 26%, profit margin 7.44%. So it would appear that the company is profitable. PEG ratio, I think it's price to earnings growth. What I had learned from the Cash Flow Academy is it's really good when this is below 1. So right now at this share price, I don't know if it's how it's really calculated, to be honest with you. And but we're at 1.3. Another thing that Cash Flow Academy teaches is enterprise value over EBITDA, like less than 10. You're starting to get a good amount of sales and revenue for the price that you're paying for that particular stock. So overall, it pretty seems to be a decent stock to look at. Let's take a little deeper. Let's figure out when the earnings. So earnings normally it's popping up here, but for some reason, under the old simulated trading, earnings has not been propagating. So we're going to find earnings in a different way. Right here. Where is it? Should have found it first. Okay. So it looks like the next earnings or the earnings was announced last July 23rd, which was last month. So we should be free and clear for a few months of not needing to worry about earnings. And here we have a chart of FCX, but we're gonna move here and look at this chart. Yep, earnings just recently looks like last July. So maybe it's going to be around maybe October when they have earnings again. And why that's important is because if we're going to be selling, which I'm going to be selling a put option on this, I want to pick a strike price that's not overlapping closely with earnings. If it is going to overlap, I want it way extended out. But just to keep things simple, look for earnings and then don't sell after the earnings report. Pick some strike price where it's expiring before the earnings report. All right, back to our chart. So this is a 1 year, 1 day, and we see from left to right, it's basically gone sideways, right? Basically sideways. This is about the 40 mark, and we're right over here about the 40 mark. But you can kind of see it with this 200-day moving average. It's gone up, but it's gone down, and basically trading sideways with this range of about 52.5 to almost a low of 27.5 in that range right there. So just by looking at this, we're going to look to the right, starting with the most recent trading day, looking to the right. Where do we start seeing? Okay, right here. But in here, it looks like there's some support resistance area at the 38. And then anything below 38 would be worth taking a look at. Now, granted, picking a strike price is really subjective into a lot of things that's going on for you. You know, if how bad do you want the stock? Do you want it at a particular price that's above any support or resistance? And if you sell, the closer you sell to the money, you know, the more premium you get. So maybe you want to buy it you're okay with buying it at 39 or even at 40. Maybe you'll sell a put option right at 40 and get paid. Depends when you do it. If we were to do it on this August 8th at 40, you're getting paid about $43 to potentially buy a stock that you want at this particular price. And then if 4 days go by and it's above 40, then you keep this 40-ish dollars and you sell it again. If it's below 40 on August 8th, then you keep this 40-ish dollars and you exchange $4,000 for 100 shares of FCX. But let's look at the 38. We're going to look at the 38 mainly because it's about $2 lower. We got some, looks like some decent support and resistance there. And for a sample portfolio trade, it's a little bit out of the money. That way, in case you're looking to it expire, to have it just expire worthless, but at the same time, maybe it's close enough where we can still get some decent premium. And you're trying to do more of a wheel strategy. So that one thing to take a look at is our ATR on the daily is about 150. So this number, $40.42, plus or minus about $1.50, gives us kind of an expected range that it could trade given the past average of the past about 12 days or so. Let's look at the weekly chart. So here's a weekly chart. Each red or green candle is representing 1 week of trading, and from left to right is 5 years. So now we see an upward trend over a 5-year time period. And we see what's really standing out, maybe about the 35. The 35 seems like a really strong support resistance area over a bigger time frame. The 40 does as well, actually. Maybe the 38 is somewhere right in here. 38 is kind of right in this area. Yep, right in there. ATR, so they're pricing in for about a week, about $3.18. Now let's take a look at monthly chart for 15 years. Look at that, basically sideways. We were trading right in here, not too far off, right? If you want to get even more pinpointed with that, it's basically almost sideways on a 15-year period. So just by looking at the charts, maybe we want to be cautious since the highest it's been in 15 years is 61, and right now we're around 40, so it's not too far off. If for some reason there gets to be a big push in copper or stocks or something like that, it wouldn't be too much of a surprise though for it to retest where it has been before in the 60-ish area. Now, granted, 25-ish area, 30 would be much more of a price. If you could have got it around here when it was below $10, that would have been great. I think this is leading up to some COVID stuff. It was COVID. I remember that trading this in the COVID arena. But then it just really took off, and we see this kind of large channel going here. So now, okay, and then I don't have it set up for the ATR on that one. Looking at a lot of different moving averages, big drop off here, and then now it's still trading after 3 trading days. It's still trading in the bottom 50% of this candle, and it'll be interesting to see what it does around this resistance area in here. It's going to go back down, or what it's going to do. Now with this, let's take a look at some potential. This is like 1 standard deviation, and I forgot exactly how much this is. It's like 95, but I don't know where that is as far as 1.5 or whatever. But we have some standard deviations that it could go. So the 38 strike price, let's just look at 1 standard deviation. So the 38 strike price looks like with 1 standard deviation, we start compromising the 38 strike price right around somewhere around August 14th or August 15th. So let's take a look at August 15th. And then this number in parentheses, the implied volatility number, we can subtract the stock price minus, let's just say 230, round it up, 230, 38.12. So they're pricing in potentially could trade as low as 38.12. If we're at 38, we're still a little below. And but it does appear that we might get assigned on that. Speaking of getting assigned, and one thing that we didn't look at yet is the the volume of the stock and the beta. So let's take a look at the beta. Right here we see beta is 1.642, which basically means for every $1 move in the S&P 500, FCX will move about a dollar 60ish more. It's going to have like a more exaggerated move for a $1 move in the S&P 500, whether that's up or down. That's generally where it's moving. And over a lot of shares, so over a million shares. I think the volume today was about 12 million. Oh, that's shares. Sorry, uh, the total amount of shares outstanding. Volume over 10 million. So very a lot of volume. How about in the option chain? Well, it seems like we're skipping here, but the 38 has almost 3,000 of open interest. And I've seen option chains with way less volume than this. So let's try it out. Also, we're looking at the probability of in the money is putting this 38 strike price at about 18, 18.28%. Got a 17% delta. If we were to sell the 5 delta, we have no bid. On the 10 delta, about 13. Let's still go with our normal plan. Now, at this point, depending on what it is I want to do. Like for example, I'm getting ready to move to another state as I record this. So if this was my real money account, maybe I would sell the 37 to give myself a higher probability of it expiring worthless. But I realize I'm going to trade off some income. Today, under this column high, this stock sold, or excuse me, this option sold for 33 cents, the 37.20 at 24 cents. But let's stick with the original plan. So let's see if we can get 33 cents for this. So I'm going to bump this up to 33. It's letting us know that basically the way things stand right now, with the Greeks being the way that they are, uh, implied volatility being the way that it is, that the stock would have to move down 60 cents in order for this to get filled. Now, let's go back to our daily chart and look at the one ATR, 1 day ATR. Well, it swings about a dollar, almost $1.50 in a day. So would it be unreasonable to think that maybe that we could get a 60-cent down move and get filled on that? This candle, it filled at 33 bucks. We seem to be getting into a resistance area, so it's not an unreasonable request. Speaking of implied volatility, something we didn't look at that I like to look at is what's the implied volatility overall. Not anything exciting. So we're selling the contract for 11 days to expiration, 33. Let's change this to good till cancel. Keep it at one contract. So what does that mean? It means that on on August 15th, if FCX is below $38, if it's 37.99, that means $3,800 flows out of this account into someone else's account, and 100 shares of FCX flows into this account purchased at $38. And I keep whatever premium that I got, I keep it. What if it's at $38 or above? Then I keep whatever premium I got, that other person keeps their stock, and I keep my cash, and then sell another option. So let's send that in. Until cancel. This is the last time to review everything. It's giving me a buying power effect of about 550, something that you really want to pay attention to. And you definitely want to be paying attention to, do you have $3,800 in your account to fulfill this promise? If you don't, you're basically selling naked options. Is that the best thing for you to do in your trading career right at the moment? So let's send it in. And with that, we got our first order, at least, for the sample portfolio using FCX. And I will make an update video as necessary. Aloha.